the fabulous Mark Myers.
Thanks, Whitney. I'm with Union Savings Bank, and I've been with them for approximately 10 years. I've been in the business since, 1989. I think I started as a business banker with Wells Fargo. What I wanted to kind of introduce you to today is just a couple ideas. Some of you have already, who here has already used a blanket loan, recommended ARM products, said, hey, let's look at cash buy. You can do a cash out refinance later. So a lot of you have already used these ideas, these programs, and what I wanted to do today is give you a little more information about them. And some of you probably don't even know what you're recommending. Just call this guy, and that's cool too. So, but give you a little more information. So when you're out there talking to your clients and you get those pushbacks, and I know we're all getting it, Tammy told me interest rates are going up, and you know what, they are. And I've had buyers back out and say, I'm out of the market right now. You know, interest rates are close to 7%. And like I told you, I came into this business in 1989. And my first mortgage, I refinanced somebody at from 14.5% to 10.5%. And they were jazzed. So, and that was 10.5%. That was in 1989 or 90. And you know, they've come down, and they've been artificially low for mega years now. So everybody in, you know, if you're in the last 10 or 12 years, I think we saw 6 or 7, but they came back down. In the last 4 or 5 years, I believe they've been in, you know, 2.5 to 3.5 percentile range, maybe, you know, touching 4, but coming back down into it. So some of these ideas that I'm going to share with you today are some ways to talk to your clients and help them out a little bit, and also have a great lunch. So we're going to go over blanket loans. We're going to go over ARM products and what's great around about fixed period ARM products. And then we're going to go over just a couple ideas surrounding cash buy, cash out refinance. Let's start with blanket loans. Blanket loans, and by the way, there's handouts here you can write on. There's pens and my cards. So how many of you have referred people for a blanket loan? Okay, so it looks like quite a few of you. So blanket loans, one of the things it does is help buyers make that transition from their current home to the new home. Basically, a blanket loan is one loan over multiple properties. So it's one loan. This is not a swing loan. This is not a bridge loan. A bridge loan basically is a second mortgage on a current residence that helps them get the down payment on a new home. Same with a swing loan. A blanket loan is one loan, both properties. This will help get over those issues with, hey, I've got to sell my current home before I buy my new home. And the catch-22 is there also, I can't sell my current home unless I have a new home to go to. So if they've got some fairly significant equity in their current home, a blanket loan will be the one to look at. Blanket loan allows them to purchase the new home normally without any down payment. You can roll in your closing costs, prepaid expenses. Sometimes you can even get cash out of the transaction. So literally people walking away from a purchase transaction on a blanket loan and receiving cash out. It does help with the down payment when it's wrapped up in the current home. If they don't qualify, it helps them to qualify for a larger mortgage temporarily. They can move slowly. You can get a blanket loan with a term up to 5 years fixed. They're 30-year terms, but fixed periods up to 5 years. One of the benefits there is they don't have to refinance if they don't want to once they sell their current home. And I'll get into a little bit more of that. Also,
I have a question.
Go ahead.
You're saying that you don't have to sell your current home, but you can, if you're looking for to buy another home, you can buy, and then the bank can finance you, but there will be collateral, the house you already occupy.
Yes, well, normally in your scenario, when you've got a buyer that's purchasing a new home, they can use the equity to buy the new home without any down payment because the equity, the down payment's in the current home. So it's one loan over both properties. Now you can do multiple. I think the largest blanket loan I did was about 45 properties total under blanket loan. That was more of a commercial. That was with that man right there. And we use the equity in current residences on $1.5 million purchase price to purchase the new property, and they had to come in with $75,000 down payment cash. So the blanket loan really worked in that scenario. In your scenario, person leaving the current home, going to the new one. Another great aspect of the blanket loan is you get the person out of the home. So you guys know what that's like to walk into a home and go, I can't show this. Yeah, I heard laugh, but yeah. So the bottom line is if somebody's you need them out of the house, a blanket loan's way to go. It'll make that transition. You can get them to move into the new home. They can get all of their clutter out of the current home. They can make repairs to it. And they don't have to make a quick transition. So they can, for older adults, they usually like to make a slower transition, have a month or so in order. They can do some repairs to the new home or do some painting, improvements, move everything over, get rid of the clutter in their current home, and then they can list their current home for a higher market value. So that's one of the biggest benefits. And that may be a great way to go just on its own. So making sure they get out of the home in a timely fashion. Blanket loan basically demystified here. So like I said, it is one mortgage over multiple properties, one payment. You can go a maximum of 80% loan to value. You don't need to sell your current home. And let's take a look at an example of a blanket loan, and I'll roll through this with you. This one is a $500,000 purchase. I'm sorry, the new home is a $500,000 purchase price, current home approximately $300,000. Total value, the two combined would be $800,000. Now, blanket loan will allow us to go up to 80% loan to value. That's $640,000. And it does require that any current mortgages be paid off. And in this example, I had $120,000 for the current mortgage. So the net actually towards the loan is $640,000 in this scenario. The net towards the new home is $520,000. In this case, they'd be getting cash out if they wanted the full $640,000. Most of my clients will back it down to actually the 100% financing plus closing costs and prepaid expenses. Closing costs on a blanket loan standardly in this area are about $2,200. That includes both appraisals, title work, everything else. It doesn't include the prepaid expenses, obviously. Does anybody have any questions on that calculation?
Yeah, on this blanket loan, is interest rate higher than the normal interest rate?
Interest rate.
That's a good question. I'll get to that here in a second. Let me talk about that right now. The interest rate, these are portfolio loans. So these aren't sold to Fannie Mae or Freddie Mac. These are ARM products. And what I used to do normally when rates were lower, my clients would get a 1-year ARM blanket loan. It'd be at 3 or 3.5%, and that was super. And then once they sold their current home and paid the blanket loan down, they'd simply refinance. And by the way, we have the $450 closing cost. And they'd refinance for $450 and they'd be done with it. And they'd be on a fixed rate. What I've sold recently, and I'll get into a little bit more of the ARM products, but I've been selling a lot more 5-year fixed periods with a 30-year term. So a 5-year ARM with a 30-year term. So that is actually at, I believe it was 4.75 on a blanket loan. So it's fixed for 5 years at 4.75 on a blanket loan. So when they sell their current home, they don't have to, they pay the blanket loan down, and whatever cash proceeds beyond that, they can pay that down too if they want to. Modify their payment, they can stay on the 5-year ARM at 4 3/4 instead of a 30-year fix today at 6.875.
Okay, when you say modify, is it re-amortizing for them if they?
Yes, absolutely. So principal reduction modification or recast essentially is what occurs. Now that'll occur automatically when it's paid down at the closing of their current home, but they can put additional funds towards the recast and have it recasted, modified lower. They don't lose the loan, They don't lose the interest rate or anything else. It'll stay fixed for 5 full years. So they can stay on the blanket loan theoretically after their current home is sold. Great there. And I've been doing that a lot lately. 6 months ago, 8 months ago, I was doing 1-year ARMs. Now I'm doing all 5 years and telling them, hey, let's do the 5-year, see what rates are. You've got some time on it. I don't get my refinance in, but it's the best thing for the client. So, yeah. So it is a great benefit there that they don't have to get rid of the blanket loan once they sell their current home.
Mark, do you have a recast fee when they recast that loan?
About $100, I think they do. There's a form they'll fill out.
Small, yeah.
Yeah, once it's paid down automatically, there's no recast fee. But when they come in with additional funds to pay it down, there would be. So there's a form they fill out. I usually email it to my clients, and they deal directly with Cincinnati. So they can recast that. And one of the things a blanket loan also has as a benefit is the ability to qualify for a much higher loan amount. So we're paying off the current home, let's say it's $200,000. In this case, $640,000 was the loan amount. And these guys had a $120,000 loan on their home. And they're like, how am I going to make a $640,000 payment? How am I going to qualify? And a lot of people normally wouldn't qualify. However, the blanket loan allows us to, when we do the appraisal on their current home, do a market rent offset. So we get a market rent. So the blanket loan allows us to do a rental offset. And what we do is we get a rental schedule when we do the appraisal on their current home from the appraiser. And we use 75% of that to directly offset the new mortgage. So where they qualify for $300,000 or $400,000, now they're qualifying for $600,000. And you'd be surprised how low the principal and interest is on actually a larger loan. People are surprised when they go, that's it. I don't have to include taxes and insurance on a blanket loan if it's going to be temporary. Pay those down the road. We can set up your escrows later when you sell your current home. So we just have to maintain, once that home is sold, and make sure you get this, the blanket loan still has to maintain 80% loan to value. So with the proceeds of the sale of the current home, that blanket loan mortgage is paid down, in this case from $640,000, it'd be required to be paid down to 80% of the purchase price of the new home. Purchase price, let me go back here real quick. The purchase price was $500,000. So if the current home is sold, the blanket loan must maintain 80% or $400,000. So with the sale of their current home being $300,000, $240,000 of that is required to be paid to the blanket loan to pay it down to the $400,000. Does that make sense? I lost myself on that. So let me know if it does make sense. So just on
bring down to 80%.
80% of the purchase price of the remaining property.
So you got a 500.
So loans at 640, you sell the current home of $300,000, it's got to be paid down to 80% of the $500,000, which is $400,000, which means 640 minus 400 is what? $240,000, right? Okay, we're good. So, rolling on time. Okay. We went over the qualifying, and I think I already went over this, but we are, as far as the periods of time, we can do a 5-year fixed period of time. You can have a blanket loan also for investment properties if you guys want to do that. There's all sorts of uses beyond just one residential to the next. So 5-year fix is the longest period of time. There is no prepayment penalty on it. And you can get your buyers out of that house for best market. So any real quick questions? Actually, let's go ahead and save those questions. Write any questions you have down right now. I'll move on to the 5-1 ARM program.